The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, a tough way to kick off the month of June in the market trade, as we saw plenty of pressure across the board with soybeans, the leader to the downside on Monday. Pressure in corn as well, not as much, but still there. Wheat well off the session highs. Pressure in the livestock trade to some degree, and definitely pressure in the outside markets. Let's talk about things and talk about where we stand right now in the markets. John Heinberg with Total Farm Marketing, our guest analyst here today on the show. John, it's been a few weeks since we've been able to talk with holidays and everything thrown in there, so it's good to catch up with you again. Hope you're doing well.
Yeah, we are doing quite well. So, like I said, been a good couple of weeks. Doesn't seem to stop raining here in Wisconsin, unfortunately, for some people, but you know, what's in the ground. I was on the road a little window time this weekend down to the Quad Cities, and stuff looked pretty doggone good in terms of northern Illinois. And we'll see those first crop ratings today for corn, and see what some of those numbers come in at, as obviously there's problems out there, but at the same time, some of the stuff that's in the ground is looking pretty dang good. And I think that's some of the reason we're seeing that pressure you talked about in the grain markets right now.
Yeah, that's a great point. We've had challenges, but we're staying on pace, and most people think those condition ratings for corn on Monday afternoon are going to be fairly decent. Just a tough way to start the month, and last week was a tough week in the markets too overall, and then you come in here on Monday expecting, hey, maybe some money flow with the new month. Well, it flowed out, and soybeans were the big loser. Have to think some pretty hefty chart damage to being done in the soy complex at this point.
Yeah, very much so. I mean, it was a difficult day. Obviously beans were already under pressure, and you saw strong selling pressure in that soybean oil market today, down over $1 a pound. That just helped weigh on the soybean market as well, and continued to slide in that soybean meal market. Right now, it's just one of those situations where the demand's not there. We got coming on supplies in terms of those Argentina beans. The Brazilian beans are in the kind of harvested here, so we're waiting to figure out those numbers overall. And we're just struggling on the demand front. We just don't see any activity happening the way we need to. And it's a bigger picture item. You're looking at a soybean book for the new crop that's the worst in 23 years. We still have yet to see China, quote unquote, officially step into the market. And I mean, there's some unknown destination sales, which might be theirs out there, but there's nothing earmarked to China. Add into that crop planning and planning progress last week being on or ahead of schedule. We expect that number to continue this week. And then the market, I truly think, has moved away from planning concerns, even though there's going to be some still lingering issues at the end of this, but it's moved more to maybe a rain makes grain type mentality. And right now with the demand where it is, the soybean side doesn't need any extra supplies, so they're taking that premium out of the market.
Well, and I've been concerned about the soy complex for quite some time. I know a lot of folks have. I think you have been as well. Just downside pressure, the potential here. Corn, considering everything on Monday, corn was fairly quiet, but corn continues to kind of lack a fundamental story to really prop it up here, it feels like, and demand is not overly awesome for corn. It's been pretty solid compared to everything else, though. We saw a sale to Spain announced on Monday morning, for instance, but corn largely, I think, just kind of getting pulled lower by the action in soy and in wheat as well.
And again, the mindset of that most of this crop will be in. 92% planted is the afternoon estimate today. So now we got to figure out what that last 8% is going to be if those numbers are true. Again, we'll see those first crop ratings. 70% is kind of what the analysts are throwing out there. But obviously, it's a first number, so we're throw out a fairly round number to see if the market goes and hits it, that type of thing. But on top of that, and this is also in beans, the technical damage we've seen the last handful of days, corn being down 5 straight sessions. We took out trend line support underneath that December contract on Friday, followed through on that today. That's that trend line running underneath those lows back to February, May, April, and then obviously this last break here on Friday. Same thing on beans. We took out that trend line support with the close today there. So right now the technical side is not in their favor. The fundamental side at least at this moment seems to be, looking at a fairly good supply coming at us. And then you got to throw the money flow in. You saw what the funds did last week. Obviously, commitment traders put together on Tuesday. we saw them sell fairly aggressively in the side of the corn market, growing that short position again. That's something I've been watching too. Open interest has been growing, meaning we've got new money stepping into the short side of the market. And then obviously that's not reflective of what happened Wednesday, Thursday, Friday, or today in terms of that commitment of traders. So it's a pretty rough picture, at least in terms of that front end view right now, that, hey, we're looking for a little bit of a near-term bottom, and I just don't see a spot yet where that wants to occur without some type of news that can maybe make this market be a little bit anxious, about those growing supply pictures.
I'm going to circle back to risk management. I want to throw wheat in here real quick. Wheat, it's been a very curious market. A lot of the last couple of sessions, we've started higher and then faded throughout the day. Is there some sort of like arbitrage type trade going on there? A few people floated that question to me. I mean, it's been a peculiar market, which wheat always is. We got all the weather concerns in Europe and the Black Sea, yet the market, it seems like we go through day sessions and we just find a way to fade any strength across Chicago, KC, or Minneapolis wheat, John.
It's a market that on the charts looks very, very tired. Yes, we got the Russian wheat concerns, and that's brought some premium in, a little bit of short covering, made the funds got out of a lot of their short positions. Now they seem to got about that 20,000 short contract positions, and they're kind of pulling up here. We'll see how things trade out. We've got 3 reversals. I'm looking at basically the front end wheat on the Chicago wheat chart, basically the 22nd of May, where this market had strong overnight sessions, or like this morning, a strong morning session up 18 cents at the pause. And then we finished the day negative. So that tells me too that the sellers are sitting on top waiting for opportunities to jump. Obviously, the biggest thing to focus in, we're probably getting real close to getting some harvest pressure from that KC wheat belt. Today's move, I think of all the reversals we've had, might have been the most disappointing. We finished and been softer, but to really just kind of whirl right through the bottom of this thing and finish at the bottom of the range just kind of tells me that maybe the energy is now to the downside in that wheat market. I know the Russian concerns are still out there very much so, but you start looking at global wheat prices, we're still too high. And that's the biggest factor that comes into play here is, we may pick up some more demand, but we're going to do that by bringing prices back down to be competitive on the global front. And we're still lacking that at this time frame. So the rally is, looking like it wants to peak out here. We'll see if we can keep going forward. That's going to be a big piece of the puzzle, I think, in terms of the other markets, because corn seems to be a quick reactor to whatever happens in the mood in the wheat market.
So let's talk risk management, grains in general, and I'm probably leaning a little more new crop here, although I know some folks still might have some old crop marketing that they got to get done. But in terms of risk management, I mean, with these markets kind of teetering on a fine line, what should someone be thinking about here as we begin the month of June, John?
Biggest thing for me is make sure you just get control of those bushels you don't have homes for. We talked about that in the old crop a few months ago. Making sure you get the put strategies in. December puts are still relatively reasonable. Put a 460, 450 floor underneath your bushels. This is a year that we need to use puts in. Obviously, we got a lot of question marks regarding weather, the wetness, how's the crop going to turn out. Put a floor under this thing. If you're wrong, market goes higher, you've got the bushels for it. If you're right, you've got at least a respectable floor put together. Excuse me. Probably not in the area where we still want to in terms of dollars and cents. But to sit here and sit back and say, I hope we get type of a rally is looking pretty hard at this time frame. Now, it is June. You typically see strength into the Father's Day window. That's kind of the seasonal peak. Maybe today we're just taking pressure off this, put pressure on this market till we get these first crop numbers. Maybe we get a turnaround Tuesday, tomorrow, go back and at least maybe re-challenge some of those highs that we just put in last week. But the worst thing is, again, it's a market like that wheat market has got a series of lower highs now. That failure to get back up to that test, that last high from the week prior at 496 on December corn, just makes things look soft to me. I think any rally here in the short term, barring a weather event that you can't count on, because you don't know how weather's going to play out, you need to be a seller of some form of protecting value in the markets.
How much are you worried about energies with the OPEC Plus news and their production cuts? Obviously down 2 to 3% Monday. Maybe that's a one-day aberration. I don't know. But how much are you worried about the energies influence in the grain market?
They seem to be really tandem right now, and I do think that was a factor in that bean oil market side today. But corn has kind of worked away from that tie to the crude oil side of it a little bit. It just seems there's a little bit of a dysfunction there, where it used to be, crude oil's up, corn's going up because of the ethanol side. It does kind of seem like that correlation softened in the last year or so here. Obviously the crude oil market is still a big factor in the commodity sector in general. We were seeing some decent movement in the Bloomberg or commodity index or some of the other groups that were out there, but that could be quickly turned over because those energies are a big piece of that puzzle in terms of figuring those indices out. So I'm a little concerned in that regard. Obviously we got OPEC going to maintain those cuts. Maybe today was a little bit more of a sell the news story versus buy the rumor to keep some support in prices. But at the same time down the road, they're still looking by 2025, starting to soften on some of those cuts in terms of production. They'll leave it up to each individual in terms of that side of it. But I think the market's just a little nervous that the crude oil supplies would have been growing. U.S. stockpiles, the last couple of reports have been above expectations, and makes this crude oil market look a little bit on the defensive here, especially with the price move today. We kind of had a bit of a triple bottom support, and we broke right through that fairly aggressively starting the week.
John Heinberg with Total Farm Marketing is our guest analyst here today on the show. John, let's go to livestock, cattle. All in all, with all the risk-off pressure really across the board on Monday, cattle held up okay. We worked off the session lows in feeders. I know some green found in front month fat cattle. It was a rough week last week, though, coming off the Memorial Day holiday. Had that JBS plant news with China and Colorado, things like that. So your assessment of the cattle trade here, starting off the week on a somewhat okay note, I guess.
To me, it's going to be about the retail value and where that directs cash. I mean, we got the news on the HPAI in terms of that one cow that herd testing positive in the meat. I think that was what started this fall. Then you get the Greeley, Colorado, China issues with JBS. So that just added to it. Now, how much of a factor is that in the bigger picture of things? China was still one of our top buyers for beef last week. So there's other sources for there to go. JBS kills about 5,500 head a day in Greeley, Colorado. So when you look at the full kills picture, it's a pretty small portion. So again, it's more of a headline than it is maybe a factor. So we'll see how that plays out. I think I'm getting watching retail values. 313 higher last week. It's a great price for choice carcasses. Father's Day is around the corner. 4th of July is right behind it. Grilling season's hitting its peak here. So we need to see the cash trade probably come through. A little bit disappointed about that on Friday's trade. But obviously with the market rolling over, that was a blink for the Packers to maybe get a bid lower, and they wound up getting it. So we'll see how that plays off. The bigger picture is still relatively friendly here. In fact, one of the things I'm still looking at is the cash market to the futures, and that premium that the cash market is holding over futures. And we're seeing some bull spreading starting to kick in. In other words, the front end months starting to gain on those back months. Might be a really good place to be right now in terms of watching that value on the front end. Even on the downside, the front end is holding its premium a little more. So that tells me it's a little bit optimistic. Now we got to get pretty good reversal today. Good to see it finish in positive territory. Now let's see if we can get some follow through tomorrow. That'll be the biggest key as charts really fell apart a little bit, like you said last week. Feeder cattle, pretty much the same story today. I think they're just going to flow with what live cattle market wants to do. It was encouraging to see it come off those triple-digit losses to basically finish slightly mixed in terms of price values. And then you got that hog market continues to struggle against the cash market. We still got a premium of the June over the index. We're, looking at direct trade, still trading significantly below the June. Kind of the opposite picture of what we're seeing in the cattle market, where the cash market is so much stronger. It just makes that hog market feel like it's still on a bit of a slippery slope. I thought maybe find some footing of, a few sessions ago, challenge back to resistance or support, or old support resistance today, and quickly gave up the farm there again. So it just makes me feel like this hog market is still on a bit of a slippery slope.
How about the dairy trade? Give us some thoughts there. I know that's been a roller coaster of sorts. Any updates as we get into the month of June?
Well, it feels like we found some stability after maybe running this thing too far to the upside, and then obviously the sharp correction. Cash cheese today was firmer. We're still watching that block barrel spread because barrels right now are still trending over blocks. We saw a good day on the block side today. We kind of need that spread to flip and get blocks back on top. The fear is it doesn't do it with barrels falling apart or blocks running up. Today was blocks running up. So it gives us a nice little boost. We'll see, though. We got a pretty good floor spot right here. Still maybe not out of the woods. We'll have to continue to watch some more of that fundamental movement in terms of those cheese prices as well as other dairy products. Maybe this market can hold in here. But right now, the trend actually is nicely lower, but a pretty good reversal on the daily chart today.
Anything final for us, John? Anything you want to reiterate to folks or mention here today on the show?
Just stay active in the grain market. I know there's a lot of sense of disbelief maybe from some people's eyes. We've been through the wetness, planting pace is on, where's the yield going to be? We'll get those questions down the road. Just act aggressively in terms of protecting yourself here. There's a lot of room in both these markets, even soybeans and beans and corn, despite the move we've got here for further downside. And again, like I said, I think any opportunity we get 20, 25, 30 cent rally or quick pop in beans, they need to be met with selling pressure until the weather or something changes, the news changes to make us feel differently. Long way to go. It's only the 1st of June today, first part of June today. So we got July, August weather. Obviously, that'll be the key. But right now, the market's feeling defensive, and I think you need to make sure you're that way too. You always got bushels to go to the upside.
John, if folks want to talk with you about their marketing plan, I know they can reach out to you there at Total Farm Marketing very easily. How can they get in touch?
Sure, love chatting with anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Don't forget that website of ours, totalfarmmarketing.com.
Always good to talk with you, John Heinberg from Total Farm Marketing. Thanks so much. Have a great week. We'll talk to you next week.
Sounds good. Have a great week, everyone.
That's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.